The bears are not gonna like this one, but strong momentum is not a reason to sell stocks. Hey, I'm Luke Downey. I am going over our latest macro insights piece from Alec Young, and it is a beauty. So here's the deal. The S&P 500 rallied 28% from the October 27th low, one of the best performances that we have seen in a long time. And you may be thinking that stocks are ready to cool off, but if you look at history, that just is not the case. So let's go ahead and look at our first historical study. This is going back to 1990. Did you know that the S&P 500's median 6-month gain is roughly 4.8%? That is this black line. Compare that to what we just saw over the past 6 months, and it is eye-popping off the chart. Now, this is just showing you that this has happened in the past. So even though it is rare, it's not ultra rare, okay? So it's not like we're seeing history or anything like that. But let's go ahead and put a little bit more context, because if you're thinking of fading this big move, think again. So since 1990, the S&P 500 has averaged a 13.2% gain in the 12 months following the top quartile 6-month rally. So basically what it's saying is the best 6-month rallies tend to be followed by even bigger rallies. And this is what you can get on average. So again, it does not pay to be fading these massive rallies. So what does this mean for your portfolio, right? If you're sitting out there saying, well, what do I do now? Well, let's start to look at what's actually happening under the surface. First of all, we've been telling you about this broadening rally. If you look at the latest sector changes, you've got energy, the best performer at 15%, comm services 13%, financials are up 11%, and industrials are up 9.2%. So those are all outperforming the market this year. So we really like those areas. And it's not just because they're outperforming. The first reason that we like energy stocks is because oil prices, they're going up. So while crude is up roughly 17%, that means that there's going to be strong earnings revisions in the sector. And also it is the cheapest sector by far in the S&P 500. Industrials, they're benefiting from just how strong the economy is. Remember how we were supposed to have this recession? Complete no-show. This is one area to bet on America is with industrials. And then number 3, don't forget about financials, right? We know that yields are coming down. That is going to make a lot of banks in a better position. They're going to be stronger. And also you start thinking about the yield curve start steepening. That just means lending becomes even more profitable. Financials are not just all about banks. You've got exchanges, you've got credit card companies, you've got all these asset managers. You really got to dive into the weeds to find the best performing financial stocks. And you know what? This also jives with our data. You look at our sector ranks by MAP score. You've got energy, top dog, not even close. It is blowing everybody away. Financials is number 2. Industrials is number 3. Look at this technology as it kind of takes a back seat. You've got all of these broadening areas that are doing really well, supportive of this momentum move that we've been telling you about. You don't want to get too bearish here. So if we bring it all together, what are you supposed to do? Listen, start looking for new leadership quality stocks. Focus on energy, focus on industrials, focus on financials. And if you need help finding outlier stocks, check out mapsignals.com. That is what we do. If you're an RIA or if you're a serious investor, we will help you find some of the best stocks out there. I'll see you next time.